The bond market just caught a breath of fresh air, and it is not what you would expect given the global headlines. Wednesday offered a welcome break from the pervasive volatility we have seen since the start of the Iran war. It was actually one of the narrowest trading ranges of any single day in March, especially during domestic trading hours. Before we dive into the math, drop a comment and subscribe for your daily DFW mortgage edge. Now, this calm is somewhat surprising. Considering the crazy headlines hitting the wires regarding the state of the Iran war, we are seeing contradictory reports about ceasefires versus more strikes, and negotiations versus no communication at all. You might ask yourself, if Iran is refuting U.S. claims regarding de-escalation, why would bonds be calmly in stronger territory? Simply put, U.S. claims regarding de-escalation matter more to the bond market than verified agreements with Iran. If the U.S. wants to wind down the war, that is what the market believes will happen. And that is exactly what the bond market likes to see. Looking at the economic data, import prices came in much higher than expected at 1.3%, versus the forecast of 0.5% and a previous reading of 0.6%. Usually, high inflation data like that would rattle the market. But not today. Let us look at the market movement recap to see how the day played out. At 08:58 am, the market was choppy but slightly stronger. MBS were up an eighth and the 10-year yield was down 3.7 basis points at 4.327%. By 11:32 am, we were near the best levels of the day. MBS were up 5 ticks, which is 0.16, and the 10-year yield was down 5 basis points at 4.315%. Fast forward to the afternoon. At 01:26 p.m., we saw a relatively weak 5-year auction, but there was no major reaction from the traders. MBS stayed up an eighth and the 10-year was down 3.6 basis points at 4.329%. Finally, at 03:06 p.m., we held sideways at similar levels. MBS finished up 5 ticks and the 10-year yield sat down 4.2 basis points at 4.323%. For my neighbors in Frisco, McKinney, and Prosper, this lighter volatility is a huge signal. When the market stops reacting to every single headline, it gives us a clearer window to lock in your home loan without the fear of a sudden spike. This stability in the bond market is exactly what we need to see for the North Texas housing market to keep its momentum. Are you locking today? Or are you waiting for a further drop? Check your options at loansbyvi.com. Comment, like, and subscribe for more mortgage market updates. See you in the next one.